26 or 220 or 224. They are here. We are talking about the stock market primary drivers for this month. First, we will discuss um, what is happening in the market right now. Remember, China's market falls 10% since January to 24, just 1 month. There are significant losses, and we may start to see why. First, remember that the gold began to increase after 2020. Uh, the primary reason this started was we saw the Ukraine and Russia conflict increase. So the people began to look for heaven assets, and then we had a trouble the inflation in the world uh, until last year. Now we are in another scenario. Um, we have a conflict between Israel and Hamas, and now we have this trouble in China market. Popular Bank of China bought 20 to 225 tons of gold last year. Let's see why. The China's government started to do this thing. One of the most significant trouble that we have today is the in stock market in China. These small caps index falling until the first day of February near to 30%. So China small caps continue to fall like the last year. And one of the biggest concerns here is the little companies, are too exposed to the domestic economy. So if China economy goes terrible wrong, the small company may also. Another trouble is that China market has oversupply and overcapacity in their factories. So when we have a monitor, so we have to monitor this trouble for the future. China's market has lost $7 trillion since a maximum level tossed up in 2021. Now we are talking, or the market is talking about the government of China. Will find it hard to rescue the stock market in this country. Last week, Evergrande, a real estate company in China, had to liquidate the assets. So had possible trouble with China GDP for the following months. And remember, the construction sector is 25% of the GDP in China. Now let's move forward and analyze other factors that may impact in the market for this month. First, the statistics analysis of the S&P month by month shows that even February in the election year, you see the black uh, line here. We see as downturn trend also all years. February in average doesn't have a lot of volatility, as you see, past 20 years, past 10 years, since 150. So let's see what happened or no. It's just statistical of numbers. The second factor is more important. This month, after the Fed meeting last week, the people start to move down the number of interest rate cuts expectation for the Fed in 2024. When began the year, people may think it, that the Fed will cut 6 times. the rates in this year. But now the sentiment, the sentiment is just four core rates in all the year. This was because Jeremy Powell, remember, said that we're a little uncomfortable with the inflation level of last week. The third thing that we keep in mind for this month is that the high speculator, the institutional speculator or non-commercial institutions have increased their position and staying the S&P. So they start to increase the bet that maybe the market in February goes down. I don't know if we'll go down. And the last thing important for these maybe these weeks is the earning reports for the last factor in this short-term scenario. As you know, the last week reported the most prominent company of S&P. But this week, for example, we will see reports company like Uber, Alibaba, PayPal, Walt Disney, ConocoPhillips, Pepsi, Spotify, and many others. Now, move a little bit more to long-term scenario. This amazing chart shows the Citigroup Economic Surprise Index. This index means that accurate economic indicator, which means inflation, GDP, unemployment, and another big metrics compared with the market expectation. How results? So when the actual number is better than the expectation, the yellow one, the index is up or positive, above zero, most times. That means that the real economy improves its performance compared with the analyst expectation. This is very good for the long-term scenario. In other words, the real number shows that GDP, look here, 2023 is improving, maybe shows that the GDP in US may start to increase in the future. This is a very good news. Another interesting point here about the Citi Economic Index Surprise is that it's very, very assertive number for knowing the performance of real GDP. In the following months, as you see here, for example, before here, 2020, the index surprise start to go down. And then you see the real GDP moves down when we was recession in 2020 in the COVID crisis. So it's very interesting number to follow. The institutional investor, the most prominent investor in Wall Street, this Fear and Greed Index is calculated by CNN, and they chose right now that the people are comfortable with the behavior of the stock market. And for the finish, remember, the institutional investor also expect the performance of the stock market. The biggest guys on Wall Street expect that the S&P will improve the performance. Less or more in 2004, like 5 to 10%. So the most analysis waiting for this scenario, which is good, very good for the for the S&P. Now let's move on and see how react the AI portfolio to all this news. In January, our portfolio meet the 6.79%, compared with the S&P, which only rose 1.78%. In consequences, our portfolio, since we start to trade with real money from April 2019, 5 years, we have a net historical return of 149, compared with the S&P just reached 83%. Very interesting. Our technical indicator called GTI indicators, which is only available for Bloomberg professional platform subscribers, shows that the market is a little choppy right now, as you see. As well, the green and red candles shows that the market maybe start to be a little choppy. So be careful. Okay, the trend is up, but here we have a little warn alarm that tells us be careful. Right now, 47% of our portfolio is made up of technological companies. Then we have health sector, healthcare. And the current principal bets are Microsoft, Nvidia, Apple, Berkshire and Hathaway, and other companies. Remember, we have 47% of technological companies. For the finish, last month we saw the return of our portfolio met 6.79% compared with the S&P, which only reached 168. We also have another technical numbers here that you see in detail in the video. We made this spectacular return in January because we made the big bet in Nvidia, in principle, Nvidia, Meta, and Microsoft. Now remember, the drivers for these coming days and month. What happened in China? First of all, we have the earnings report, Pepsi, PayPal, Alibaba, Mattel, Ford, CVS, and other companies. We also have to keep in mind that the China, also Friday, we have the initial jobless claims. And we have to keep in mind that is happening with China. They start to celebrate the New Year's Eve this Friday, and they finish the following week. So a lot of news may be coming to China next week. Be careful. Also, many members of the Fed will be speaking in several places in the United States. For that reason, our general expectation is to be cautious. Just remember. Thank you so much. Remember, please read the disclosure. Take care. Thank you so much for having me in this webinar. Have a nice week. Bye-bye.